welcome to India Market Open. There's lots to cover in early trade, lots of cues that we're getting in from the world markets. Global equity markets are down, crude is up. Local cues also quite a few with regard to NSC, cement price hike, auto sales behind us. It's a busy morning, guys.
It's a busy morning, so much to talk about, so much to cover. But suffice to say, the global cues are not positive this morning. It's a tough one.
And maybe Intel and Tesla are symptomatic of what the world is going through right now.
Absolutely. Intel, Tesla, BYD. So a lot to cover, Let's begin by just telling you what's been happening overnight. So the Dow is down nearly 400 points. At one point, nearly 500 points down. So it's a combination of perhaps taking some profits off the table. Remember, Q1 was excellent for the US markets. Maybe you're seeing that. A combination of nervousness, at least, because you have an economy that's growing strong and inflation, which is not close enough to the 2% mark that the Fed wants. So then now the question is, will June really be the first rate cut? And you're seeing that play out in what we saw in the markets overnight. Niraj was talking about Tesla, and that was the big story in a sense. 5% down on Tesla because their first quarter numbers have seen, or deliveries actually, have seen an 8% drop year on year. And after those poor Q1 numbers, you saw sentiment soar. On the other hand, now look at this. Equities are down. Bond yields are hardening. So you saw the 10-year at one point even hit the 4.4% mark. It's about 4.35% eventually. But you're seeing that trend go upwards. Not too much respite if you look at other factors like crude, and we'll be having a more detailed conversation in a bit as well. But suffice to say that crude prices have jumped. And a couple of geopolitical factors. So remember yesterday we talked about the Iranian embassy in Damascus being hit by a missile strike. As expected, Iran says they think Israel did it and that they're going to hit back. So is that going to be the start of a geopolitical conflagration? Now, to make matters worse, a Ukrainian drone has taken out one of the biggest Russian oil fields overnight as well. So which is why you're seeing crude prices showing that tension. And of course, we'll come to more detail. But there's so many factors today. So crude is up. Gold has hit another high. Bitcoin has crashed about 5%. So you have that whole picture coming. And just look at what's happened to Asia this morning as well, as you've seen a sharp decline. And again, apart from all the other factors, it's the EV pain as well, where you have Tesla and a BYD. BYD, in fact, one of the largest Chinese EV makers, has seen a 46% drop in their numbers just quarter on quarter. So that EV story souring is an interesting one.
Indeed. Just before we talk about EV, a quick mention on crude. Tamanna, you've got the OPEC Plus meeting today as well. So while nothing is expected to change in terms of supply cuts or supply addition, it'd be interesting to see what the commentary really is for those guys. And another interesting headline that I caught, and I want to very quickly mention it and talk to you guys about it. China and Hong Kong have lost $5 trillion in 3 years, which is more than the market cap of India. I mean, that market is still standing, right? So that's an exciting, statement I read. It was an interesting headline, so just thought I'd bring it up for our viewers. That's the kind of significant loss China has gone through, but it continues to stand. But I believe we've got Vandana Hari. Should we very quickly go across to Vandana and ask her what's really driving crude? Vandana Hari, founder and CEO at Vandana Insights, joins in. Vandana, good morning, good evening. A quick one from my side. Crude has been on an upward trajectory for the from the start of this year, really. It's up 6%. It was up 6% in March, inching every bit closer to $90 a barrel. Now, in your opinion, what is this? Is this a geopolitical stress that we are seeing in, Israel, Iran, that equation? Or do you think that an improvement in demand, anticipation of that, is really driving crude higher? So is it a supply problem, or is it improved demand situation that's supporting crude? Vandana, can you hear me? No. Okay. Vandana, can you hear us? Okay.
I think we'll have to wait for that wave to come in. By the way, just before we talk on to all the other things, just cross fingers for and prayers for people in Taiwan, and hopefully it doesn't morph into something even big in terms of a tsunami hitting some of the other coasts and damaging more lives. So that is one prayer out there for sure. But yeah, the other aspect is, of course, and hopefully we'll get Vandana soon, but what it does mean in terms of, one, crude doing what it is doing, but at the other end, just a bit of anomaly from risk assets perspective, because we're seeing gold do what it is doing. We're seeing yields inch up quite substantially. And does that hurt us meaningfully, or risk assets meaningfully, is the other key question.
Most people were expecting gold to sell off. And it's not just stabilized, but it's moving higher. So, well, I think Vandana is back. Vandana, very quickly, crude has been on an upward trajectory from the start of this year. 6% gains in March, 10% higher from Jan this year. What do you think this is? Do you think this is an interim gain on back of, reduction in supply on back of Okay, I believe we are still waiting on Vandana. But yes, talking about gold, what's happening in gold is, I mean, Indians, I'm guessing, are happy. SGB is getting oversubscribed, as always.
It's insane. You know, we did a Twitter poll a few days ago, and I don't know if you saw it. If you didn't, please go to the NDTV profit handle. We did a Twitter poll that what will do better, and we gave an option of asset classes. And at least when I clicked, gold had the highest in that list. So gold is definitely going to be the story. So we'll try and get more details for you on what's happening with crude prices, but suffice to say that's going to weigh on the markets today, and we should perhaps look at what the other factors are, Niraj, because global cues are definitely not positive. Indian markets, I wouldn't even say closed down. It was flat to negative yesterday, but the sentiment didn't seem like it was holding up from what we saw on the 1st of April.
Yeah, most certainly. Just the sense of yesterday's movers seems to suggest that there was a lot of positive bias for things getting discounted in a jiffy. So if you just look at what the index did yesterday, deceptive so, but look at what movers did. So the key movers in yesterday's session, Tata Consumer, suddenly people find favor for FMCG. M&M, auto numbers getting rewarded. AB Capital, a brokerage note, talking about doubling in 3 years, and suddenly an underperforming stock. Of course, the AB group was in focus, but the stock getting up 10%. Symphony, well, we know it's going to be a hot summer, but suddenly out there, people are seeing that as if there is no tomorrow, take a stock up 10%. Oil India, discounting oil. SAIL, discounting the China data. So things got discounted very, very quickly in trade the last 2 or 3 sessions. Almost a bit of a left out feeling. But today, Tamanna is right. Skittish global cues, higher crude do make the risk reward unattractive for leveraged longs. Now, you could be buying into stocks based on bottom up research, that's separate. But leveraged longs, maybe for an intraday or a 1 day, 2 day basis, maybe the risk reward isn't the most attractive. Keep in mind, traders are betting at a very wide range for the current month. Of course, it's the start of the series, and maybe that is why it also has an impact. But just look at the call and the put data. Puts at 22,000, calls at 23,000. So it's a very wide range in which this is being done. So that's the other aspect to focus on as far as option support or option resistances are concerned. Sectors that may be focused on, pharma and metals, to my mind, certainly stand up there. Somehow the metal trade has come back very, very strongly based on the China data. I think there is a Macquarie note today which speaks about how the week-on-week property registration data in China is also looking up. So metals certainly remain in the fray. And pharma, guys, remains in the fray. I mean, we'll talk about it in the stocks to watch piece as well. But just the fact that there is a $5 billion vision of quality sourcing unveiled by the US, you would argue that emerging markets like China and India, but I would argue from an Indian perspective, India, looking at the generic exporters, looking at very good prospects as a result of this. If this does turn out to be true, and if Indian companies manage to find a foothold there, that's a large bill out there over the course of the next 5 years, waiting to be ticked off.
Yeah, absolutely. I think the pharma space has come to life and heated up in the last couple of months specifically, and as a trend, and of course we'll have to dig data and get you the numbers to back this, so it's not a claim I'm making off the top of my head, but the kind of strictures from the US FDA, etc., have been coming off. That quality piece has been improving consistently. There was a time when that was the biggest trigger for pharma stocks, and not necessarily perhaps. But there's a whole lot of stocks to talk about today as well, Samina.
There are. So yeah, just a quick one on the F&O data as well. So while we did make record highs of 22,525, it's aggressive open interest addition was seen at levels of 22,500. So what this really means is, while you might have, like Niraj said, the next 1 or 2 days, could see a little bit of consolidation, the medium-term trend remains positive if 22,300 remains a key level of support to watch out for on the Nifty. So if you do break out above that, continue to trade about 22,500, 22,700 traders believe cannot be ruled out at this stage. So long still intact, interim consolidation is what we are currently eyeing. Well, there'll be sectors to watch out for. Well, pharma will be one of them. So will metals this morning. You've had a bunch of metal companies reporting best production months ever, and I'll start with MOIL. If I can pull that one up on the screen. The stock was fairly active over the last few days of trade. They've recorded the best ever production at 17.5 lakh metric tons, which is up 35% year on year. They also have record sales for the month to come in at 15.3 lakh metric tons, up 30% YOY. So great numbers there. The stock should see a bump up. And of course, let's not forget that the dollar is looking a little subdued this morning. So that could be another factor that could keep metals in focus. You also have Nalco, which has achieved its highest ever aluminium bauxite production in FY 23-24. And you've got Hindustan Zinc. Now, those numbers not looking as great as it did for Nalco and Moil. Hindustan Zinc's mined metal output is marginally down, but it's up quarter on quarter by 11%, but there's a marginal downtick year on year on that number. Refined metal production is up 6% quarter on quarter and 1% YOY. This one, of course, had seen a pretty big move in trade yesterday. It'd be interesting to see how this plays out in today's day of trade. Well, a quick other one, JSW Energy. This is an update. The board has approved fundraising plans of about 5,000 crores via QIP, and the floor price is set at 510 rupees. The stock had seen a big move in trade yesterday, potentially on back of news of this fundraising approval coming through. But again, could be seeing a downtick on back of a big discount to yesterday's close. So while everyone's calling this a funding winter, I'm not sure how that is, because all these QIPs, fundraising, listings are getting snapped up.
Funding winter is for startups.
Acha.
Funding winter is in Bengaluru.
Not in Mumbai.
Not in Mumbai. And I think because that whole cycle has
slowing down
perhaps
now.
Run its course, where you could just ask for anything on a great idea in a coffee shop, and then someone wrote a check.
I mean, there were times tech companies were going at 20x.
Yeah.
Now you get 7-8x, so, you're still good.
Now it's about companies where you can see what they're going to make. So old infra and old economy in vogue. But yeah, a couple of other stocks that on my radar, Anupam Rasayan is one that I wanted to talk about. They've signed an LOI with a Japanese multinational company with an aggregate value of about 743 crores over 7 years. They're going to be supplying to advanced intermediates using fluorination chemistry. Now, as my colleague Varsha explained this with a lot of enthusiasm, this particular chemical that they're going to be making, they will be the first company in India to make these key molecules. It's a high margin business, which is why you might see a positive outlook on Anupam Rasayan today. And their supply commences, from FY 24-25. So that's one to watch out for. Suntech Realty is another one, because we've been talking about the reality boom in advance, but is a standing structure in a key commercial area really able to get that yield? And which is why I found the Suntech Realty story interesting. So they have this premium building at BKC, which they have leased out to Bennett Coleman. And the revenue is about 2,000 crores to be generated over 29 years. So till FY 26, that works out to about 140 odd crores, and then it moves out to 300 crores per year in terms of yield. So a rental yield at this level shows, some real green shoots in commercial real estate as well, on ground. I would say evidence of that. Cement stocks was the other one. So now you had some reaction yesterday as well, but I would look at some of those cement counters, ACC, Ultratech, Ramco, Shree Cement, your entire lot. So they have hiked prices, and the price hikes are fairly significant, and they come at a time when it was expected cement companies would not be able to hike prices ahead of elections, but they have. The price hikes are also pretty decent, 30 rupees a bag. In Karnataka, we'll just pull up that chart for you. Look at Tamil Nadu, 50 to 80 rupees a bag. So you might see a follow-on reaction there as well today.
Just very quickly, Niraj, I want to comment on Suntech Realty. So while this is great for them, it also makes media sound like it's in a good space. You make a 2,000 crore rupee commitment for 29 years.
Yeah, absolutely. But perhaps they're moving from, if you know Bombay, those of you know Bombay, they're moving perhaps from old Mumbai, VT, to BKC. So that's another level of move. But
the annual math comes to about 50-60 crores for that headquarters. So
still a lot of money.
Yeah, I mean, age-old company believes it will last for another 100 years, which they very well could. I mean, who's to challenge the newspaper business there? So, yeah, pretty interesting there. But no, on cement, interesting. Tamanna was talking about it. Yesterday's trade was interesting on cement. Look at the price OI action in some of these. So, Ramco, Dalmia, India Cements, very strong price and OI build up there. So long formation seen in cement already. So pretty interesting that somebody had a whiff, somebody did this, and maybe there could be more in store as well. So watch out for cement stocks in this session.
I was just to add to that, I was seeing a note, I won't name the brokerage, from I think 48 hours ago, saying that cement looking tough because they're unlikely to raise prices. So.
Yeah, certainly.
Shouldn't be subscribing to that brokerage report.
I'm not naming any names, but yeah.
Okay, and some more stocks just very quickly. Before I think we'll probably get in a word from Vandana Hari in a moment from now. But pharma stocks could be in focus today, like we were saying. U.S. government has laid out a vision for multi-billion-dollar pharma sourcing plan over multiple years, and therefore the likes of Sun Pharma, Dr. Reddy's, Lupin, Aurobindo, all of these could be in focus today. Watch out for the CDMO companies as well, the likes of Divi's, etc. They could all be in focus because of this. In case there is a reaction, you should know why that is happening. Remember yesterday, some of these stocks, especially the CDMO players, were very active. JSW Energy board has approved a fundraise of 5,000 crores via QIP at a floor price of 510. Remember, the floor price will not necessarily be the price at which the deal is done. At times it happens at a discount. Wockhardt did. But still the stocks jump up if the appetite is good. 5,000 crores is a large one. Let's see how JSW Energy reacts today. The other one is Anant Raj Industries, and this could be very interesting simply because amongst everything else that they are doing, it's still a small cap company, but it's set up a meeting, or Capital International, one of the biggest FIIs for India at least. They are meeting Anant Raj, and somehow something tells me this doesn't mean that they're going to invest, by the way, but because this is happening, I dare say you could see a bit of a reaction in Anant Raj Industries today. So do watch out for this one as well. I don't know how Sona BLW reacts, to be honest, guys, but they've got an approval for a second hub under PLI. Maybe that stock reacts, but could be interesting.
Yeah. So many more to talk about, but let's quickly get a word in from Vandana Hari. We've been trying to connect with her since the start of the show, so good to have her on. First, let me check the audio. Vandana, can you hear me?
Yes, I can. Good morning.
Good morning. Very good morning to you. This is Tamanna here. Great to speak to you here on NDTV Profit. Vandana, we're trying to get a sense of what's happening with crude prices. Is this a sustainable upward trend that we're now seeing? And the point that Samina was making earlier, is this a supply issue or a demand issue? Are you seeing this more because of geopolitical problems now cropping up, or perhaps an economy, a global economy, which is now shifting into the next gear?
So it's very much a supply risk factor, I would say, at current levels. So let's say Brent around $88, $89 a barrel. Compared with $75 when we entered 2024. I would say at the current levels, there's at least a $12 to $15 per barrel pure geopolitical risk premium in crude. So there's supply concerns actually on two fronts simultaneously now. One is, of course, the Middle Eastern tensions, of course, centering around the Gaza-Israel conflict, but now seems to be spreading out some more following the attack on the Iranian consulate in Syria a day ago. And while there's been no supply disruption as such due to this Israel and Hamas conflict, the fear has grown as a result of the widening of tensions. And the second front, of course, is relatively new over the past few weeks, definitely through March, as we saw a spate of Ukrainian drones hitting Russian refineries. So an estimated 800,000 barrels per day of Russian refining capacity has been shuttered because of all these attacks on Russian refineries, which means Russia is exporting less refined product to the world markets. Right. So those two, partly it is an actual disruption, but much more than that, it is a fear of the worst-case scenario of further disruptions in supply.
Right. Vandana, very quickly in terms of trade, and this is paper crude I want to talk to you about, where are you seeing support and where are you seeing resistance at? With a delayed rate cut from the Fed, a stronger dollar is what we're anticipating for the next couple of months at least. Will that cap gains for crude?
Yeah, so definitely the outlook for the global economy, and which again tends to center more or less on the U.S. and what the Fed is going to do with the rates, definitely that is a supporting factor for crude. If crude does lose its footing or the rally runs out of steam, I would say it would probably come from renewed concerns over the global economy, and we already see some signs of investors starting to lose confidence in the Fed rate cuts, when it will start and the pace at which the rates will be brought down. So we could see some pressure coming on crude from that end. I do see resistance around 89.90 for Brent, but as long as these two fronts continue to simmer, the Middle Eastern crisis and the Ukraine-Russia conflict becoming worse, I see it a support at least at around $80 for Brent.
Very quickly, Vandana, I don't know whether you're tracking the dynamics of what's happening on Russian crude, and I came across an article this morning that said Russian crude exports are at a record high. Well, they're the ones causing all the problems. It seems like it's working out really well for them. And India continues to buy a record amount of crude from Russia. How does that dynamic fit into the bigger picture?
Yeah, so as Russian refining capacity is being hobbled, as I mentioned earlier, nearly 800,000 barrels per day has been forced to shut in because of the drone strikes. Russia has more spare crude that it cannot put through its own refining system, so it will export more. That is natural. As far as Indian imports are concerned, I think that the fear that Indian imports of Russian crude would come down was a little bit overdone, overstated. Yes, the discount that India has been getting has been crunching, which is not a good thing for India. But nonetheless, there is a discount, compared with comparable crude. So as long as there is any discount that Indian refiners are able to get on Russian crude, they will buy it. And as long as they are steering clear of violating U.S. sanctions, they will continue to buy. So, I don't see a steeper drop in Indian imports of Russian crude. It makes sense to buy it as long as there's any kind of discount.
Okay, Vandana, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts on this. Well, it remains a pot boiler situation, pun intended out there. Let's wait and watch how it shapes up. But what's also, well, if I can use that term again, pot boiler, is what's happening on the currency side. Well, the INR is stable, but a lot of mechanics within the INR are not. And Alex, I believe you are talking about what's happening on the derivative side in a meaningful way on the equity end in the session today.
Absolutely. In fact, that is the focus today because of what was announced by the National Stock Exchange yesterday. In fact, I would invite Samina to join us because this is a conversation that we're going to have with her as well on the editor's cut. Let's break this down first to talk about what was announced today and what the implications are, because there are a couple of scenarios that we will have to peer into, and we'll also talk about who benefits or who stands to benefit the most. Agam, let's start with what was announced, and then we'll move from there.
Sure. So what's announced is that the lot sizes for 3 of the derivatives on the NSE have been reduced. So the Nifty 50 contract will reduce from 50 to 25. The Fin Nifty contract will reduce from 40 to 25, and the mid cap Select Nifty contract will reduce from 75 to 50.
Correct.
Where the effect will come into place on the 26th of April. That is one day after the 25th April expiry, and this will be valid for the July 2024 contracts going in. The reason why they've taken it up is, of course, this is an exercise that exchanges take every 6 months, and well, from what we understand is that SEBI has given a notional size for each contract to be within 5 to 10 lakh rupees. And considering the Nifty has run up so much, and it's sustaining well above the mark of 22,000, 22,500 at the moment, of course, it does seem like exchanges think that it's a good time to.
What is the notional value right now?
So at the moment, the notional value of the Nifty 50 is about 11.5 lakh rupees.
11.09. But very quickly, Agam, you said this is a biannual revision that the NSE undertakes. When was the last time that they actually significantly reduced their contract size?
So, well, the last time we saw a change was, in fact, the Nifty moving from 25 to 50.
And when was that?
This was about 5 or 6 years ago. I still need to.
So this is a big, significant move, even though it's business as usual.
It certainly is, but it's for good reason, because we have seen the Nifty move up substantially as well, say, in the last 5 or 6 years. So yeah, that's largely
the long and short of it, if you can call it that. But let's talk about implications, and I guess to a certain extent, Agam, we're going to have to, and Samina, we're going to have to build out a few scenarios. But let's talk about beneficiaries first. On the face of it, seemingly, the exchanges and the brokerages have...
Absolutely, always. The house always wins. Well, so, of course, it's going to lead to a better liquidity, and this will also lead to a lot of institutions perhaps be able to more finely manage their risks, because you just have that much more granularity since you have smaller lot sizes. And the real question is whether or not, your institutions and retail participants benefit. Sure, the lot size is very attractive, but it'll also come down to several costs.
So therefore, and we'll come to that in just a bit, but on the opposing side, we've seen BSE make some big moves to their betterment, and we've seen that reflected in the stock price, which is up 500%, over 500% over the last 12 months.
Yeah, so I think the one house that may lose, at least sentimentally this morning, could be BSE. Of course, now, just to put this in perspective, NSE is in a different league altogether, right? So there's no way you can compare the two, but let's not forget, BSE is listed, NSE is not. So if you want to play the exchange game, you want to play the India equity story, your only way to do it is through the BSE. Now, just to put some numbers in perspective, NSE, like Agam said, has halved their contract size on the Nifty 50 from 50 to 25. This move also comes in to sort of keep up with what you have in terms of the Sensex contract size. The average Nifty contract after this change comes down to 5.5 lakhs, 5.5 lakhs versus 11.09 lakhs, which is what it was when it was 50 units. So 50 shares in terms of a contract, as compared to Sensex, where the unit or the lot size is 10 shares, the value of it is about 7.5 lakhs. So if you're comparing in terms of value, volume, liquidity, BSE is at 7.5. You've got now NSE, which is at 11, coming down to 5.5. So this change could be also viewed as moving or keeping competition at bay, right? We've maintained NSE is a league in itself, but nevertheless, BSE is gradually inching up. Last Jan, when they had the new CEO come in, there were a number of changes that were undertaken. One such being that Sensex weekly expiry was moved from Thursday, which is when you have the Nifty weekly expiry, to Friday. So they wanted to keep that separately, and that worked out really well for BSE.
And they've got an expiry on several days of the week.
Yeah, and they saw a massive bump up, right? So if I've got those numbers right, the average daily derivative turnover on BSE rose 34.6 trillion in FY24 versus 1.38 trillion from a year ago. So while I said two different beasts, BSE is still really small, but someone could view this as a move of NSE to continue to maintain its leadership.
Yeah, I remember very quickly that for a few weeks, the NSE had decided to keep the Bank Nifty contracts expiry on Friday, but they took it back because I believe that BSE had come in and requested you can't do that because we already have the Sensex expiries there. So please, you're going to have to take a step back, which is after that, in fact, it was decided to pull it back on Wednesday.
Let's talk about the last implication, because I think to a large extent, a lot of people interpreted this as resulting in significantly higher volumes. However, I think the kingpin or the deciding factor is going to be the cost of each contract.
Yes.
How do you explain that?
And I think this is going to be the most important aspect to watch out for. Currently, a contract in an options market, on an average, is about 20 rupees per lot size. If the brokerages decide that they do not want to change or reduce their contract or brokerage overall, that means instead of paying 20 rupees for a 50 size contract, now we're going to pay 20 rupees for a 25 size contract, which means that for a 50 size contract, or rather 2 contracts, you're going to have to pay 40 rupees. All right. This really doesn't become a huge amount of an issue when you actually sit and write your at-the-money options, because there the premiums are relatively larger. But when you start moving out of the money slowly, steadily, that's when option premiums becoming smaller and smaller. And the further out you go, the less option premiums that you will see. At one point in time, it will be very, very... I would say it won't be lucrative at all if you actually go ahead and sell those
Could
options.
one interpretation of that be that we will see lesser volatility? Could that lead to lesser volatility?
Yeah. So it may not lead to lesser volatility. I think of it as a positive. Sure, it will certainly reduce the kind of traction that we see on tail ends. But the fact that you're not getting to write those options anymore also reduces the overall risk of the system.
Sure.
Because when you write an option, you are also taking on
unlimited risk.
Unlimited risk, theoretically. And that, of course, reduces substantially.
And this goes back to what the regulators wanted. Remember, a couple of weeks ago, we were talking about all that froth across the broader market. So this also could be on the lines of reducing risk, protecting retail investors. But very quickly, how does this compare to the BSE costs? And I think this is going to be a sentimental negative on BSE, by the way, this morning. It wouldn't surprise me if the stock sees a gap down on back of NSE's move to half contract size.
So brokerages remain the same for BSE contracts as well.
Okay.
And in this case, of course, again, it's going to come down to, the fact remains that BSE option market is still not very liquid, so it's going to be, that's also something that's going to be a wait and watch.
This kicks in 26th of April for the July contract.
Yes.
So we'll have to watch how these pan out over a period of time. And remember, the most important point is whether or not the price of a contract, the cost of a contract will change. So we'll have to probably speak to a few brokers and see what their reaction is going to be. That brings us to the end of this particular edition of Editor's Cut. It's been an interesting one. Let us know what you think in the comment section, and do stay tuned. Lots more coming up before the start of trade. This is NDTV Profit.
Welcome back. You're watching India Market Open. Let's do a quick check of the implied open. Remember, most of Asia is down in the red, and we're looking like we're in for a rough start as well, as per the GIFT Nifty. The implied open about 119 points down. What is it looking like on the F&O side of things? Agam is joining us for more. Do you hope for any enthusiasm? Because more people can now participate for less money. But anyway, the timing perhaps is not too good.
Yeah, so what's really happened over the past few days is that every time the market opens at a certain level, taking into account the global cues, well, we start to see a little bit more consolidation, sideways movement, and that's what's happened yesterday as well. Whether or not it's an expiry or no, we tend to see a lot of consolidation across the indices, and that's how things panned out yesterday too. For the Nifty, of course, it was a flat day of trade, very little traction in terms of index futures, just about 2% added there. For the Bank Nifty as well, again, marginally in the red, largely flattish. Open interest seeing about 1.2% added. Again, a very quiet day. Yesterday, in terms of the options market, the Nifty, well, did see a lot more traction around 22,500 and perhaps on expected lines where we did see a lot of traders right that particular strike in terms of calls as well as puts, as you can see on your screen there. But moving on to your overall open interest distribution, we still do have a significant amount of accumulation in calls around the 22,500 mark. And of course, in terms of puts, it's fairly distributed between 22,000, 22,100. At the moment, it does seem like consolidation could potentially be on the cards, but it'll also depend on where we in fact open, and the first 15, 20 odd minutes of trade could potentially also decide how things could pan out for our known markets. Well, of course, it is the Bank Nifty weekly options expiry, keeping an eye on 47,500. It's on the other side of the end as far as this bar graph is concerned, but 47,500 is the key mark to keep an eye on, because that's around where we have seen a lot of traction for the Bank Nifty. Well, moving on to stocks, again, it was a fairly mixed day of trade, but shorts for India Mart and Gujarat Gas, longs for Ramco Cement, Aditya Birla Fashion and Havells. In terms of stocks, we saw unwinding. Well, we did see short covering for JK Cement, Emphasis and Godrej Properties, and longs unwinding coming through for Info Edge and ABB. But the real question is, what do you do in these markets? Well, let's get an expert opinion here. We have Aditya Arora of Analytics Research who's joining us on the show. Aditya, good morning. Thanks for joining in. Again, your view on the indices, more consolidation on the cards?
Very good morning. Yeah, absolutely. The data is actually suggesting consolidation because there isn't big long build-up or short build-up in index futures. So probably some consolidation more over there. But stock-specific action is good. If we see yesterday, then all the middle stocks have done really well in this week. And a lot of banking names also popped up. But consolidation in banking name is still continuing. So I think those candidates are buy on dips, which makes Bank Nifty also buy on dips candidate. So I think market is a good buy at these levels. Today we'll open with gap down, but it could be a short put shorting opportunity. So neutral to bullish bias is a good strategy in this market. So selling put option is a good strategy, and we'll see breakout once Nifty crosses 22,600. So we can see good momentum over there. On Bank Nifty front, I think good momentum is likely to catch up above 48,000.
Markets go on the view on how things could pan out for the Nifty and the Bank Nifty. But Aditya, I believe you have a option structure that you're playing out on IRCTC.
IRCTC has been consolidating since many weeks and months, and now this year it's doing pretty well. So I think this can outperform, and outperformance may continue. So it's a bullish strategy on IRCTC. We can sell 1050 put option, which is trading at 58.60, and we can buy 1000 put option, which is 29.75. So if the stock goes above 1050, we'll get the full benefit of the premium, which we have sold. Maximum loss potential over here is 18,506, and maximum profit potential is 25,244. So it's a neutral to bullish strategy. If the stock goes up, one who constructs the strategy gains in this strategy.
Aditya, I know while you joined for options, I'm just inclined to ask you, we saw fairly significant long addition yesterday in some of the cement counters. Have you looked at the likes of Ramco, India Cement, etc.? Because the OI buildup was very strong. We also know now that there's a fundamental reason for cement prices having increased prices. Is there merit in trying to initiate a naked long into any of the cement names?
Very good morning to you. I think it's a very good idea to go long on cement counters because all the industries which are tilted towards infrastructure are doing well, whether we talk about reality, whether we talk about metals and now cement is also catching up. So definitely cement stocks will also see new highs as we have seen in reality. So just today we have got a buy call on Ultratech Cement by a major brokerage house. So similarly, smaller candidates like India Cement, Ramco Cement also look good, but the outperformance will continue whether we talk about large caps, small caps. Very good time to go long on cement space.
Yeah. Aditya, thank you so much. We'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts.
Thanks.
So, well, viewers, some option strategies and also a view on cement. We'll, of course, get in our other guests to talk about cement as well. So, that's the other interesting thing. Before we get in our guests, just a quick word, because there's so much of talk around this whole policy that is getting framed in the US, so therefore pharma. And the other thing is this Chinese data, the India PMI, so on and so forth, all pointing towards could there be a revival in, a strong number in manufacturing and what it could do to metals.
Yeah.
We've seen some evidence of that. Hitherto metal stocks have flattered to deceive, gone up and then come off. Could this time be different is the key question.
So in China, in terms of China, the Caxton data, of course, for manufacturing was higher than expected. The services data was out early this morning, and that is also higher than expected. So you're probably going to see a China revival on track. And then, of course, the question that Samina has been asking for a long time, then what happens to India? Does India become less attractive, less favorable for foreign funds? So that also plays out one way or the other. But I found this whole EV thing fascinating. The fact that EVs are suddenly now losing charm in that sense. I know you have just two sets of data, Tesla and BYD, but there was a survey, Indian survey of consumers a few days ago, where consumers were asked, would you buy an electric vehicle? Only 5% said they would, if it was in the 8 to 10 lakh rupee range.
We have a 33% weightage on this table, which is looking to buy an EV. I'm just wondering to ask whether the weightage is inclined to buy an EV.
8 to 10 lakh rupee bracket. I'm sorry. This is the 8. This is your.
Don't insult me so much. I can afford an 8 lakh rupee car.
No, you guys
I'm not that underpaid.
You guys are way above the 8 to 10 lakh rupee bracket. So, you guys are the 0.001.
I do enjoy the Uber. We'll stay with that.
Okay.
But speaking of autos, should we get into an auto conversation?
Absolutely. Is EV really pipped to be the game changer everyone's hoping? Kumar Rakesh, India analyst of IT and auto at BNP Paribas, joining us this morning. Kumar, very good morning to you. Great to speak with you here at NDTV Profit. And while we're gabbing on whether the EV story is really going to come to fruition, the hard data from March and the last financial year tells us that passenger vehicles are still doing fine, ICE is still king, and so are anything that passes for an SUV. Two-wheelers have also recovered. Would you say that that's the key takeaway?
Hi, Tamanna. Good morning, and thank you for having me on the show. It was fascinating to hear your conversation just before I joined in. We actually ran our own survey with the owners of electric vehicles to understand that what is the real bottleneck in the adoption of these electric vehicles in India. And there are two key takeaways which we got from those surveys and interactions. The first is the charging infrastructure. It may not be such a big bottleneck for the two-wheelers, but it definitely is a bottleneck for passenger vehicles because they typically drive longer distance and they would want to have the charging infrastructure set up on the path on the customers typically travel on. The second is the charging technology as well, because the current charging technology takes quite a long period of time to charge the vehicle, which is not very convenient to customers. And hence, most of the customers today are charging these vehicles overnight at their home. And that restricts the use cases that they can potentially use these vehicles for. And that possibly is the key bottleneck in the near to medium term. While there is a good understanding of the total cost of ownership these vehicles offer, but it is right now restricted only to customers who are using these vehicles for a really long journey, whose daily usage would be more than 40 kilometers, is when these vehicles start making sense for them, both from cost as well as the challenges which the technology currently has. That being said, on the two-wheeler which you asked, there we believe that the customer understanding is very well matured now, and they understand that these electric two-wheelers are the next generation technology. They don't need charging infrastructure because the battery sizes are small. The time needed to charge these vehicles are much lower, and they are quite comfortable charging these vehicles at home as well. And there we expect a structural increase in adoption. March obviously was the month of pre-buying before the incentives were to come down from April. And hence we saw very strong adoption, penetration reaching almost 9% from about 5-6% in the prior months. So we would expect April will be much weaker post this pre-buying. But again, a structural increase in adoption should start continuing from May onwards is what we would expect.
You know, just to close off that EV conversation, I was looking at the data, and this is Vahan data. In the last 10 years, in FY 2014, there were about 2,627 EVs sold. In FY 24, it's 16,75,800 EVs sold. So you are seeing a big jump. The pace is the question. But I want to come to you, Kumar, also on the issue of commercial vehicles and tractors. It's been a dismal show, to say the least. Now it's being put down to perhaps a delayed monsoon, a whole other set of factors. Do you see this trend persisting, or would you expect an improvement post-elections?
So for commercial vehicles, it's fair to expect post-election, we would expect a reversal in the demand. The new government, when that comes in, should start focusing on issuing the tenders, and the new construction activity should start picking in. And that's when we would expect the commercial vehicle demand should start reversing. The current industry volume is still similar to where the last peak cycle volumes were. So there is still some headroom left for this cycle peak volume is yet to be arrived. The tractor is a segment where the last 3-4 months data have been quite disappointing. Double-digit volume decline continues, and it was in the March month as well, a double-digit volume decline, both in retail as well as wholesale volume numbers. And that is a concerning. I believe that the consensus would be building some growth going into FY25, and those numbers would definitely start coming under question, and there is a downside risk. If we look at a long-term trend over the last 40 years of the tractor industry data, there is a huge cyclicality in that, and that cycle typically is of 3 to 5 years. And if this trend continues, there is more risk on the downside than on the upside, what the expectations currently are for FY25 for tractors.
You know, Kumar, another interesting story that has come about, and I don't know how much you're tracking this, but Tata Tech and the BMW JV. So we're going to be hearing from Warren Harris in a bit from now, but this, of course, saw a big boost to the stock. It's a prestige project. How much value do you think this adds to a Tata Tech, and is there an impact, if any, on an LTTS which had a pre-existing deal with BMW? Now, it's not clear if this is in lieu of or in addition of, but clearly a significant build-up of BMW's presence in India, and their software updates are going to be through Tata Tech. So just your take on this deal and the implications for these two listed entities.
Sure, Tamanna. I cover technology as well, coincidentally. Yeah. So.
No, I knew that. That's why I asked the question. So not so much of a coincidence.
Yeah. Over the last 2 decades, actually, if you see, India has become a hub for outsourcing technology work, and it's both for IT services as well as engineering and R&D services. Actually, among the GCCs, which are the captive entities of these global enterprises, India would be having close to 45 to 50% share of global GCCs. So India has become a dominant space for establishing such R&D centers. And it's no surprise that some of the leading automakers are incrementally looking at India more favorably. especially in the context when I cover technology and I see the resource crunch which many of the enterprises face in their developed markets, be it US or Europe, makes India even more favorable that you start looking at India more favorably to set up incremental R&D centers here. And that is something which possibly is just reflecting in these news updates which you are seeing. So these most likely are incremental work coming to India in lieu of how it is far more difficult to ramp up similar tasks in Europe or US. And also it's the cultural difference. Being a traditional automotive company, there's only so much in-house that would be possible to do at a reasonable cost. And it becomes far more easier to partner with some of the companies who are really deep into this, and which is where many of the Indian IT services companies or engineering R&D companies start to shine in this context.
Yeah, absolutely. So watch out at 9:35 for that conversation with Warren Harris of Tata Tech, where we ask him about this deal and a lot more. Thank you so much for joining us, Kumar, this morning. But let's get to the meat of the day. Aditya Agarwala, Head of Research and Investments at Invest4Edu, is now with us on the show. Aditya, very good morning to you. You know, it's been, I think I would describe it as Indian markets holding up in the face of a global storm that's brewing, and that we've seen overnight deepening. In terms of the Nifty and the Bank Nifty, where do you see the challenge coming in today?
Morning, Tamanna. Thanks for having the show. I think we are still in that range. It is just that the range has shifted upwards, Tamanna. On the downside now, maybe 22,200, which is the 20 DMA, will act as a support. On the upside, for back-to-back 3 trading sessions, we've not been able to sustain above this hurdle of 22,550 zone, even though we did make a new all-time high by a marginal few points, but it did not really sustain above that. What I'm looking at is that resistance to be taken out decisively and markets closing above that. Good thing is the broader markets are participating in the past 2 days, so which is a healthy sign. But today will be a key trading session to watch out for, because we'll be opening with a gap down, and it needs to be watched very closely if the support levels of 22,350, 22,300 levels hold on in today's trading session. Otherwise, we'll again slide down to that lower end of the range. So my take is we are still in that range, broader range between 22,550 to about 21,800, with an immediate support at 22,200, which is the 20 DMA. Something interesting is every time the Bank Nifty is trying to inch higher and maybe it is closer to its new all-time high, we again see a bit of a selling pressure that comes in. So Bank Nifty is something which has not been participating the way it should, even though it has participated in the past 2 trading sessions. But still, I would want to see that kind of zing coming in from the Bank Nifty above 48,000 levels, which is not coming. So all in all, I believe markets will remain range-bound, both the Nifty and the Bank Nifty. And markets could turn a little choppy as well from the time the polling starts, maybe after 16th of April, the first wave of polling starts. So might be markets can turn volatile after that.
Phase 19th April onwards is going to be one to watch, definitely. And I mean, no exit polls, of course, but we will see perhaps some of your first cut of pre-poll surveys coming in the next few weeks. That may be a trigger as well. I have to say, though, so far the elections are being seen as by the market as a bit of a non-event. Now, having said that, Aditya, let's quickly take your picks for this morning. What would be your top 2 calls?
So I'm going to buy and sell, clearly, because I don't know how the markets will behave in trade. Trade could be soft, could be sideways. So I've got a buy recommendation on Birla Soft. This stock, after a big up move, went into consolidation. Now I believe it's time to look at the stock again. Could be a time for IT stocks to come back after an underperformance. So Birla Soft is something that I'll go ahead and buy for a target of 820 on the upside, with a stop loss at 735 on the downside. I'm going to sell on Axis Bank. Looks like there's a bit of a selling pressure which is coming into Axis Bank. And as I mentioned, banks are looking a little wobbly at the moment. So Axis Bank could be one of the candidates to short for a target of 1,010 on the downside, with a stop loss at 1,070 on the upside.
Right. Gentlemen, stay with us. We'll also put the focus on the currency markets. The Indian foreign exchange derivative volumes are expected to decline quite sharply on back of mandatory exposure rule that kicks in on the 5th of April. Now we'll break this down and try and understand what this means for currency traders, speculators, and individuals or companies, smaller ones, that actually have an exposure to cross-currency or the dollar. Anuj Gupta, head of commodity and currency at HDFC Security, joins in to break this down for us. Anuj, break this down for the sake of our viewers. Simplify what this means. From what we understand, the regulator up until now had allowed speculative trade on the dollar-rupee pair without any underlying exposure of up to 100 million. That rule now stands changed, and I believe the industry is concerned that this is going to impact volumes in a big way, because a lot of the trades are not always because you're looking to hedge an exposure. Most part of it seems to be or has been speculative.
Good morning. See, on 5th Jan, RBI released a circular regarding the currency market, and they released the circular which it mentioned that clients will trade only the currency market as per their physical exposure. It means only currency market used to hedge the position which is physically exposed in the physical market. So now, as per the circular, it is clearly mentioned that the clients who want to trade in the currency pairs, particular which involved INR, they can only trade as per their physical exposure. It means that physical trader can only trade in the market. No intraday traders allowed in the market. No speculator can trade in the market, and even no other option trader can trade in the market. So, and if you see this currency market, almost 90% volumes comes from the intraday traders or speculators. So now after this circular, they will not able to trade in the currency market, and will see a sharp decline in the volume. Only the physical exposure trader will trade in this market as per their physical exposure, right. And it also be mentioned, or it also be keeping in the books that this much of amount they have a physical exposure, and equivalent this much of amount they can only hedge from the market.
Anuj, let's just try and understand this. Small companies, corporates, clients who actually have an exposure usually use the forward market to hedge through a bank. What we see otherwise outside that is large speculators. Now tell me, what do you think is the rationale of the regulator to do this? Because I know all the way back in 2007, when we were dealing with the currency crisis, this is exactly what happened, right? Where underlying was required for cross-currency trades. Why is the regulator doing this right now, especially if volumes are going to be impacted so much more? The markets are so much more deeper today than they have been in the last 20 years.
See, this circular is a little bit confusing because nobody is able to, interpret the reason why RBI did this, release this circular. But yes, definitely, because in the futures market, currency has on NSE or on BSE. So on the both exchanges, 90% volumes comes from the speculators and traders and intraday traders. But small corporates, importer and exporter are doing this kind of hedging direct from the bank. So I'm not expecting that that will be benefit for the market. I think this is little bit towards the it lose the strength of the traders in the market, because when we talk about that Indian currency would become global currency. So now at that point of time, if we took this kind of step, possibly that will hurt the traders or investors.
Right. Will this have any impact over the next couple of days or weeks as this, of course, kicks in on forward premiums?
I'm not expecting so much kind of forward premium, but yes, definitely the volume of the exchange will shrink from the side, and even many broking houses, all broking houses who are trading in currency market possibly lose their businesses.
Lastly, Anuj, I'm sure the industry is shaken up from the sound of it, and I'm sure there are appeals being made to the regulator. Realistically, do you expect the regulator to come back and, maybe undo this, delay this, make some changes on what they've said with regard to underlying? Because if 90% of the volume is going to be hit, I genuinely don't think the country or the regulator wants that.
See, every time we saw this kind of activity in agri commodities, banning of the agri commodities, and again restarting of the agri commodities. So similar kind of thing we saw in the currency market. Possibly after some time they will, come out with a new circular or new guidelines. But possibly, I think it will take time. But now recently, this, from the 5th of April, no trader, speculator, or intraday will be able to trade in the currency market.
Right. Thank you for that, Anuj. This is not good news. Remember, proprietary traders and individual investors are responsible for 80% of the traded volume. The smaller companies, the smaller investors who actually have an exposure to a foreign currency use the forward markets or the forward premium to go out and hedge their exposure, usually through banks. So the business that's getting hit is the speculative business. But there was an analyst who said that because of the inclusion of India on the debt indexes for Bloomberg, etc., this doesn't come in as a surprise, because what the regulator is trying to do is keep the currency stable. So while they've had ammo in terms of intervening the market as and when required to support the local currency, this could be one more step in that direction, where they're trying to keep the dollar-rupee pair stable. It's been one of the most stable currencies across Asia, at least in the last couple of years, guys.
Okay, well, from currency and whether the currency has an impact on stocks or no, but definitely a lot of stocks in news today. And let's talk about the fundamentals as well. Mayuresh Joshi, HR Market Smith India, joins us right now on the show. Mayuresh, thanks for waiting for us, and appreciate your patience, and good morning to you. Mayuresh, we were talking in the studios about whether metals become an interesting bucket to bet on, considering this uptick in manufacturing that we're seeing globally, but particularly in China on the property side as well. Is this still a false alarm, or could this time metals rally for real?
Morning, Niraj. Thanks for having me on your show. I think the base factor that remains is a genuine recovery in China, because China is the sole market that will determine how numbers probably play out in terms of both production as well as supply, because it's one of the largest reprocessing economies as far as the metal sector is concerned. The second element obviously is the inventory levels across the globe. So whether you take ferrous or non-ferrous, steel stocks, lead stocks, copper stocks are at abysmal low levels across the globe. And as demand starts coming back slowly and steadily, whether in the European zone or the North American markets per se, and a genuine recovery in China, the prices on LME will start showing an uptick northwards. This will also mean that input costs, which includes iron ore, bauxite, alumina, will start moving higher as well. But then it will genuinely indicate that demand has come back strongly, consistently, and it is here to stay. So very premature, at least from a very global perspective in terms of these data points. Consistency over the next 2 to 3 months are key in terms of a genuine recovery. In the same context, Indian domestic volumes remain extremely strong because of the infrastructure activity and spending that is happening, expectations of private capex coming in at some point of time. But a large element in terms of operating leverage largely not getting played out is because LME prices still remain subdued. So I think would take this with a pinch of salt, Niraj, would see consistency in data at least for the next 2 to 3 months to genuinely believe whether we are genuinely on a strong track to recovery globally as far as demand dynamics are concerned.
Okay. Mayuresh, now we were toying around with the once newsmakers of the day today, and on that, the data that is coming from a MOIL in particular, the FY24 growth numbers, the highest and beating the best year that they've ever had in history by a cool 28%, or a NALCO coming out with numbers as well. Is there merit in looking at any of these individually?
So numbers have been outstanding, no two ways about it. Now the only factor that remains is over FY25 and 26, with the high base that they've probably created, how are they going to outbeat this performance? Obviously, I think, as I said, in the domestic context, demand remains extremely strong. Pricing remains a little bit volatile in terms of how global queues are, and input costs also remain volatile. So if the input costs presumption and assumption is they remain stable over the next few quarters, the expectation in terms of a stable margin performance is a given. The other element obviously is in terms of the overall volume growth itself. How much can they outperform over FY24 in 25 and 26? So one has to really assume very practical presumptions in terms of the kind of volume growth assumptions that can come through, specifically for both these counters. Obviously, expectations in terms of aluminium as an end use case, as far as electric vehicles, electric factories are concerned, is a big factor moving forward. And so is the expectations in terms of domestic demand and industrial production as well. So largely, I think volume growth should be normalized going forward as well. Valuations obviously have peaked off for both these counters, but the momentum can probably take the stock onward. So I will wait for pullbacks on metal counters in China.
Aditya, one stock that I haven't been able to get my eyes off has been Hindustan Aeronautics. Last couple of weeks, order wins back to back. The recent one with Cochin Shipyard has also meant the stock is up 10% in the last 4-5 days. At 3,500, it's a one-way journey from 3,000 rupees, at least since when I've been watching it closely. Where from here? If today it's a flat start, would you initiate a fresh long?
Morning, Samina. Thanks for having the show. Oh, yes, I believe it's a fresh breakout for the stock, and there is further upside in the stock without a doubt. What is interesting is even after the outperformance that the stock had posted last year, it is continuing to do so. Went into a minor consolidation, and yesterday it posted a big breakout on good volumes. So my sense is it's going to sustain. Question is if it opens flat or maybe with a minor gap, given the fact that markets are opening gap. Will I initiate a fresh long? Yes, closer to about 3,400 is the immediate supports. I would not shy away from taking a fresh long in the stock with the stop loss just below 3,400 and look for a target of 3,800 and beyond. 3,800, I believe, could be tested in a matter of a couple of weeks. So this is something which is looking very interesting, and the setup is also very strong. So yes, it's a thumbs up, and I would want to be a buyer in the stock if I see a gap down or a flat opening.
Now, Niraj, I want to bring you into this conversation. There was a report yesterday by Jefferies which says they see a 45% upside, even from these levels, on stocks like HAL, BEL and data patterns, interestingly. How do you feel about these counters? Still constructive even after the recent rally?
The momentum, Samina, can very well continue. Obviously, I think the tailwinds that happen or exist for all these stocks in general are commonly known to the markets. They've got a very, very strong order book, which gives revenue visibility over the next 4 to 5 years. The expectations in terms of defense spending continuing in the Indian context will mean that more orders will come their way. And all these orders are coming at very healthy margins. So I think the kind of operating leverage that one really expects from these companies can very well continue. I think the only sore point becomes if they are not able to execute for a quarter or two for whatever reason. And in that scenario, I think the expectations in terms of the entire earnings matrix probably comes off significantly. So to that extent, I think the only risk for the entire defense pack is execution itself. And if that does not happen over any couple of quarters over the next couple of years for whatever reason, the earnings might come off quite significantly. Having said that, valuations are on the higher side. They trade above key pivot levels as we see that markets with India. So anybody holding these stocks can continue enjoying the momentum. Fresh investors again have to patiently wait for pullbacks for most counters in this.
Patiently wait. Don't know when your number is going to come in that sense, but nevertheless, that's the view on some of those defense counters that are looking really hot, and they've all done really well in trade yesterday as well. But apart from that, Aditya, even Adani Group names have been seeing some traction, at least this week. Anything in the Adani pack that looks like a good trade for the April series?
I would like to avoid a few of the names because they've already shot up big time. Could be Adani Ports or Adani Entertainments. These are the ones which one can actually focus on if at all they want to focus on. Between the two, Adani Entertainment is something, Samina, which is not participated the way Adani Ports has done. So maybe Adani Entertainment could be Enterprises could be one of the stocks to look at. Above 3,300 odd levels, it can test levels of 3,800 on the upside. But be a little watchful. Don't be in a hurry to go out and buy Adani Enterprises just now. Wait it out for it to sustain above 3,300, then it can be a good idea to latch onto it. If I look at some of the cement stocks that the group holds, be it an ACC or an Ambuja, they definitely look very interesting to me. So Ambuja Cement is something which can be looked at on a minor decline or even at current levels. I think there is big up move which is coming up in Ambuja Cements, can easily test levels of 660, 680 on the upside with a good support at 610 on the downside. This is the one trade that I would like to take within the group of Adani stocks if I have to pick one.
Right. Aditya, Mayuresh, stay with us. Let's take a look at some of those brokerage notes as always. Harsh is standing by with his list. Harsh, what do we have this morning?
Well, first off, couple of very interesting notes. First off, on ICICI Lombard, target price 1750 on this one. Jefferies reiterates a buy. What they're suggesting is there's a strengthening presence with regard to where health is concerned. On the health insurance side of things, they're ramping up on both digital as well as agency, and that should drive growth on the health front. Largely, health growth has come in from group as of now, but they are expecting the agency ramp up to lead to retail growth, which should obviously lead to better profitability as well, and that should happen in the next 2 to 3 years. So that's on the health front. With regard to motor, there's been a lot of competitive intensity has been strong across the industry, especially over the last year or so. That seems to be ebbing, and therefore they believe that motor pricing has started to improve, and that should clearly benefit ICICI Lombard because it has a very strong presence in motor. Now they're expecting a premium growth of roughly 16% CAGR over the FY 24 to 27 period, both driven by health and motor, and they're expecting a lower combined, which is roughly at 103. They're expecting 102 in FY 25 and 101 in FY 26, which should lead to better profitability. They're giving it a target price of 1950 on the basis of a 25 times June 26 EPS estimate, and they've raised this by around 2 to 4% in terms of earnings as well. Now, quickly switching focus, Shelly Engineering is the other one which we've picked, initiating coverage note coming in from Systematics. 720 is the target price on this one, so large upside from here on Shelly Engineering. It's a leading exporter of high precision engineering products across segments, so it does both all on OEM, consumer, healthcare, across segments is what it caters to. Now, with regard to some pockets, one, healthcare and consumer to lead growth. Healthcare especially, 150 crore of capex, possibly, at least a 3-time kind of revenue potential from the healthcare segment alone. So large potential there. They're expecting a 19% CAGR on revenue, 29% EBITDA CAGR, and a 46% PAT CAGR over the FY 23 to 26 period. Target price based on a 30 times earnings FY 26 multiple.
All right, thank you for that, Harsaita, there with the list of brokerage notes that you should keep on your radar this morning. Mayuresh and Aditya with us. Just about 4.5 minutes to go for markets open. Mayuresh, just your take on cement companies. You already saw some moves yesterday, and then the news that a price hike has come was not really expected, and frankly, quite a significant price hike at one go. What would be your favorite picks in this space? Would you go for the big ones or look at some of the key regional players?
Morning, Tamanna. I think so a large element of the price hikes, as per our channel checks, has also been some element of increase in input costs, and therefore they have front-loaded these hikes to a large extent. Obviously, expectations in terms of utilization levels exceeding 75% with a lot of construction work across sectors expected in the next few quarters and years, is going to keep cement demand in momentum. What probably happens through in terms of input cost inflation going forward, I think the pass-through will keep on happening through because demand remains extremely strong. Having said that, the expectations in terms of Q4 numbers specifically, reported EBITDA per ton should have a very, very stable performance. A lot of cement companies, Tamanna, have had internal power consumptions, whether it's waste heat recovery or captive power plants, which is reducing the cost in terms of power consumption as far as their overall operations are concerned. And therefore, stability in terms of operating performance is something which can be expected generally for the pack as a whole. Having said that, we obviously look at leaders as per our methodology, and therefore UltraTech Cement continues to remain our top pick within the cement pack, followed by JK Cement, because our expectation is that numbers should largely hold up for few companies like these, which have a good product mix and a good distribution and geographical reach as well.
Yeah, just a quick word on two stocks that did really well yesterday, and would you be biased towards them today? One of them was Symphony, the other was Aditya Birla Fashion Retail. Quick thoughts there.
Symphony, yesterday we did see a good volume build up there. I would like to wait it out and maybe buy above 970. It's a good trade to take, Niraj, without a doubt. Above 970, I'm looking at a target of 1100 with a support at 950 on the downside. Aditya Birla Fashion Retail is something that was on my list as well. So definitely I look at this stock. Though we did see a bit of profit booking from the top yesterday, but I still believe there is good upside left in the stock. Yesterday volume was massive. So on the downside, 230 is a very strong support. And I would not shy away from taking a long position, maybe more of a positional trade for a target of 280 on the upside. A long way to go for the stock because it has not performed at all. So I believe it's time to look at the stock and be invested for at least 280, 300 levels.
280, 300 levels on ABFRL is what he likes. Just a quick word since we are having that cement conversation. Aditya, anything that you like in this space? Ramco is not doing too badly in pre-open trade. Last I saw Shree Cement, or would you go for your Ultratech, Ambuja kind of players?
I already mentioned one, Tamanna Ambuja Cement definitely stands out. I definitely like the stock. The second one, I would agree with that Ultratech is one that I also like on the chart setup. It's broken out from a falling wedge pattern, and Mayuresh also pointed that out. So I believe that Ultratech should be on your radar as well, looking at the chart setup. I would look at for a target of 11,000 on the upside with a good support on the downside at 10,000 odd levels. Given that risk to reward is also in favor, so Ultratech and Ambuja Cement are the ones that top the list within the cement pack. And I believe there's a good trading play which is taking in the cement space. So you can definitely look at the entire gamut of cement stocks within them. Maybe Ambuja and Ultratech top the list.
Okay, Aditya, 20 seconds. Your top trade for the morning.
I'll go with Birla Soft because that is something I believe there's a good upside momentum left in that. So maybe a Birla Soft buy for a target of 820 with a stop loss at 735.
Okay, we'll get in Mayuresh's top theme as well in moments from now. But the market's about to start, so let's focus on what we'll do today. Remember that banks might be a bit sedate, but oil and gas upstream could be in focus because of the oil price uptick. Does that kind of negate each other remains to be seen. We're starting off soft on expected lines, about 80 odd points lower, 1/3%. Nothing dramatic, but 1/3% lower, and rightfully so. The world markets aren't the best. Bank Nifty about 1/3% as well. Bring up mid caps 1/3%, small caps flattish. So well, relatively small caps have done better each of the last 4 days. They're starting off in the same fashion today. Let's get the heat map up on the screen and show you what's moving and what's not. On the upside, is it oil? Actually, Ultratech, so about 1.31% higher. Maybe cement has it in it today. We'll wait and watch. But yes, oil upstream is starting off well because ONGC is up about 1.27%. Oil India yesterday, remember, was up about 6%. Maybe there is more there today. Divis, I think there's a BOFA note with a double upgrade. That stock is starting off okay. There is strength in Axis a little bit, and Shriram Finance could be because of this story around how Bain is coming close to acquiring one of the units, but it's kind of flattish. What's not doing well? Airtel, maybe a delayed reaction of sorts. The numbers weren't the best. The stock is down about 1.2% today. Bajaj Auto cooling off after the gains that it has had. Mixed bag for IT and FMCG in the session. So nothing too untoward, nothing too great. But for Ultratech and ONGC, which are kind of standing out as very strong movers, because on the losing side, Tamanna, you can clearly see stocks which are just cooling off, most of them, after a rally that they have had. The likes of Bajaj Auto, BPCL, and a couple of these FMCG names like Nestle.
Absolutely. The Ultratech story also perhaps because of an announcement they've made yesterday, over 30,000 crores of investment plus 2 new facilities that they're going to work on. So maybe that's what you're seeing. But a few stocks that have been on our radar from the broader markets. Let's look at what's happening with Z. An announcement late last evening that Puneet Goenka will take a 20% pay cut. And, pre-market, that stock was buzzing, but about 1% up now. Suntech Realty is the other one. It was on our watch list as well. We were talking about a long-term 29-year deal for them in their premium spot in BKC. Adani Green has reported as its first company to surpass the 10,000 megawatt renewable energy limit. They have India's largest operating portfolio right now. So that news flow, but not too much of a reaction this morning immediately. Anupam Rasayan is the other one that we spoke about. It was in our trade setup list as well. And that stock doing fairly well on opening trade, about 4% up, but come off its initial burst as well. So they have signed an LOI with a Japanese multinational company and will be going into specialty chemicals, being the first in India for that specific molecule. Gensol Engineering had a set of pretty good business updates, records its highest ever revenue of about 960 crores. So some of those buzzers here, but many coming off. You're seeing a bit of selling pressure right on top, Samina, and tell me what you are spotting. But the sense that I'm getting is that it's really a sell on any rise.
Yes, it is a morning of profit taking and no surprises there, right? You've seen a bunch of weak global cues. And remember, we've also ran up quite well. So the Nifty has done well. 22,300 will remain an important level of support. And we're inching closer to that, 22,366. But until that remains, it seems like the positive medium-term outlook is intact. In terms of stocks, MOIL, let's pull that one up. It saw in traction in the early part of this week. Fantastic production and sales numbers, on back of which the stock is seeing a very, very good up move this morning. 6% on MOIL is what we have. Tata Investment Corp back on the upper circuit drive. The stock is up 5% in early trade as we see it. You've got Hindustan Zinc as well. So talking about those production numbers, Hindustan Zinc also managed to do quite well in terms of what we saw in production. Record levels there too. The stock is up 3%. While we are at it, let's pull up Nalco as well. So these were three companies that posted their numbers, and all three are actually trading with a very clear positive bias. This was stocks that were marked in trade setup as well this morning. Another interesting one is Cochin Shipyard. That pair trade between Cochin, or no, actually it's not really a pair trade, but the deal between Cochin and HAL did lead both those counters much higher. HAL is quiet, but Cochin Shipyard, after a 12% up move, literally over the last 2-3 days, continues to do extremely well. 4% high on Cochin Shipyard. So there clearly seems to be no stopping. It's gone from levels of 700 to 1,000 in literally a span of 3 to 4 days. We'll try and get a technical view as well on Cochin Shipyard in a few minutes from our guest. Adani Group stocks continue to do well. So yesterday was the day that was Adani Wilmar. Today's day belongs to Adani Ports. The stock is trading flat on my screen. I'm not sure. Okay, well, that is... we'll pick that one up in a minute. Macrotech Developers is down 3% in trade. You've also got some of the other counters that are seeing pressure. So DLF is seeing a little bit of a weakness. Godrej Consumers, Godrej Properties are seeing a downtick in trade. Chalet Hotels, on back of its fundraising, is seeing some weakness. FMCG generally is looking a little weak, and cement is seeing profit taking after its up move yesterday. Autos as well doing pretty much the same thing. Stocks like Bharat Forge and Ashok Leyland seeing some selling in early trade. But I think the stock of the morning is some of these metal counters: MOIL, Hindustan Zinc and Nalco.
Yeah.
Not surprising.
All of realty is actually under a bit of pressure, I would say, except for a Prestige. And we will be speaking to them in a bit from now. But realty doing poorly, and largely, your entire basket of banks, consumption, all of them feeling a fair bit of pressure.
And we know that's happening in Cochin Shipyard. And it's up. It's gone. It was 700 rupees on Monday. And what are we at Wednesday? 1,020.
Wow. Really?
Yeah.
Okay, that's interesting. Well, let's pull up this week's chart for that. Cochin Shipyard once before we go to our guests and talk about some of these pockets, metals, real estate and 12%. The others. But Cochin Shipyard up 3.5%. Just pull up the 3-day chart if we can, and let's see what it's done. Yes, this week about 12%. So yeah, good show for this one for sure. But metals it is. Let's start off with that. We spoke to Mayuresh about fundamentally about some of these. The way they have started, Aditya, is there any metal stock that could be traded?
Oh, absolutely. And this is one space which has surprised everybody. People were a little bearish on the counters. Despite that, it has surprised. If I have to pick a trade now, maybe JSW Steel definitely stands out for me. Still hasn't broken out into the positive territory for the day, but I believe this is one trade to take with a stop loss close to about 860. Look for a target of 910, 930 on the upside. The second stock could be a National Aluminium as well. That is something which is broken out into a fresh record highs from that consolidation. So at current levels, one can look at initiating fresh longs for a target of 185 on the upside with a stop loss at 165 on the downside. So a National Aluminium and a JSW Steel both stand out for me. I think these are the two trades one should take within the metal pack.
Okay. Mayuresh, any idea about Cochin Shipyard?
Strong order book, Niraj. Expectations in terms of them executing this for the next few quarters is something that the market is probably feeling very optimistic about. And the second element is very stable margins that they've probably exhibited as well. So I think the combination, as I said, for defense, counters in general, is revenue visibility remains extremely strong. Expectations of more orders coming their way is a given. Margins are extremely good as well, and therefore I think the operating performance should hold out for these counters. I think valuation is a totally different story altogether, but I think all these factors are acting as tailwinds and giving huge amount of momentum to all these stocks.
Aditya, are you tracking Anupam Rasayan at all? That stock, doing pretty well in an otherwise tepid market, and fundamentally also a big queue for that counter. Overall, specialty chemicals have not had the best of time, but Anupam Rasayan on that positive news. Do you like it on the charts?
Tamanna, it's facing resistance at the 200 DMA and also the 90 DMA, the 100 DMA. From the top, it has seen a bit of profit taking. Seems like OpenEye is also same. So I would wait it out and see how the stock behaves maybe after an hour or so of the trading done. On the downside, 900, 890 is a good support area. If stock tests those levels and from there sees a renewed buying interest, then maybe I'll be buying in the stock with a target of again 960, 970, which is the 200 DMA, continues to act as a resistance. I will wait and watch before I initiate a fresh long. Not a bad trade to take, definitely, but one has to be a little more watchful in today's trading session because from the top you've seen a bit of profit taking in the stock.
Names are doing quite well. So Nuvama, if you can pull that up on the screen, Angel One, Anand Rathi, I'm not sure if I can have that. Let's see what's happening on some of these names. So on a subdued day, 3% on Angel One. Nuvama as well, I think, is seeing some traction. 2% on Nuvama is what we have. Insurance companies are looking good today. So GIC, case in point, is up about 2%. Muthoot Finance is up 2%. So while banks may not be having a great day, it's the ancillary in the bank space. So everything that's non-banking is looking pleasant. Mayuresh, is it just a trading pop for some of these non-banking names? So your capital market players, insurance, are they looking good just largely on trade, or for the next couple of months, this could also be a good story to invest into for a tactical rally?
Being a stock market participant myself, I think remain extremely optimistic on capital market plays. And I think the logic is very clear. The kind of additions that are happening organically in terms of demat accounts, as an example, the expectations in terms of the culture, in terms of equity investment and investing that is getting spread across the length and breadth of the country, and millennials who are probably more attuned in terms of equities as an investment option. I think all these factors are going to ensure that capital market participants and proxies probably remain in the limelight. Obviously, a lot of these players have taken digital initiatives, which has reduced costs quite significantly onto their books. And that gets reflected pretty largely in terms of their operating performance as well. It's no longer the case 10 years back, which was only related to brokerage. I think it's a gamut of services that are being offered digitally and otherwise. You look at presentations of Nuvama or any of the wealth management players as well. I think over the next 5 to 10 years, the kind of additions that will happen in the ultra HNI category or the HNI category itself, who will need financial planning and assistance, is going to be huge. So I think all these players will remain in focus to a large extent. But to your broader question in terms of NBFC as a space, housing finance companies is something that we are keeping on our watch list at Marketspace India. I think the performance has been relatively better for companies like BNB Housing as an example. Asset quality pressures have come off. The expectations in terms of the overall book itself, which is largely dominated by retail, obviously adds a little bit of an element in terms of as rate cut starts happening, even in the Indian context, a lot of growth can probably start coming through in the second half of this financial year and expected to continue because the real estate cycle, we're in the midst of that 6-year cycle, which can continue after rate cuts very aggressively, at least for these players as well, which will probably to a certain extent lagged growth because of rate hikes and so on and so forth. So I think within the broader NBFC space, I think these housing finance companies can offer a lucrative bet from a risk-reward perspective.
Mayuresh, any thoughts on Yes Bank? They put out their business updates today, and they seem to have been better than expectations. Stock is up on high volumes as well this morning. Just sequentially, the deposit growth has increased by 10% at a time when that's a big problem for banks. And obviously, when we get an opportunity to speak with them, we'll try and understand what they did. But just your thoughts, Mayuresh, on Yes Bank?
Yeah, Tamanna, I would love to hear that conversation on how they have achieved that deposit growth as well. But to a large extent, I think the performance has been very, very volatile to a certain degree. And therefore, I think consistency in terms of numbers is something that the street wants to look at. Obviously, a few quarters back, the expectation was that a huge turnaround will take place as the cleaning of the books will happen, so on and so forth. But volatility still continues. So I think at this juncture, still better off looking at larger names. What we have on our watch list is something like an ICICI Bank as an example, where the numbers have been reasonably good. Retail loan growth has been reasonable. The NIMs have remained stable, even in the scenario that we probably looked at. And similarly for NBFCs, as the rate cut scenario starts taking place, the expectations of normalized NIMs and spreads should start coming through. And deposit growth should then accelerate as we head into the second half and the next few years as well. So to that extent, I think the mix that they probably have, the kind of subsidiary performance also probably aids the SOTP valuation. And valuations are not that expensive for a large bank like ICICI Bank. So I'm better off looking at leaders like ICICI Bank rather than Yes.
Aditya, you like Yes Bank?
I would like to say that I do like Yes Bank, but again, on the upside, there are hurdles. 30 is something which is the maximum that I see on the stock at the moment. There's no bias here, but yes, 30 maybe could be one thing to look at. Apart from that, there are pockets which are outperforming. Maybe an auto is something that I would look at right now. Mahindra is something which is looking interesting, Tamanna, at the moment. Nice trade, maybe for a target of 1075. One can look at with a stop loss closer to about 1960 on the downside.
I wonder if in a weak real estate market, Anant Raj is reacting at all or no, but yeah, it's a very interesting announcement to see them meeting capital. It could be interesting. Data centers, real estate, lease. Mayuresh, any thoughts on Anant Raj? It's actually done really well recently, but have you looked at this company at all?
Yeah, and I think you mark the point appropriately, Niraj. I think data centers is something which is the kicker for this stock. And obviously the expectations in terms of the spend that will happen towards data centers is going to be phenomenal over the next few years. So to that extent, I think the kind of moves that we have probably seen, you might say it justifies the kind of price move because of numbers that have been put out. But again, I think if you entirely want to play that theme of data centers, power ancillaries, smart meters, why not look at a stock on pullbacks like a Techno Electric as an example? Techno Electric has all the ingredients in terms of not only the power space, but also smart meters as a space, and also the data center matrix, which goes very, very well. I think the capex is almost going to get over for one of the biggest data centers that we probably see in Chennai. Obviously, valuations are a little bit on the higher side, but I think it will trade at premier valuations because of the kind of expectations that one has. Just a key point here as well, I think with the flue gas desulfurization expected to get completed before March 26. I think a lot of players like Techno Electric, Power Mech as an example, which are key players in this space, should start moving ahead as well. It's a 1 lakh crore market, Niraj, and we hardly scratch the surface, and just a matter of 18 months to probably fulfill or have fulfillment of those orders. So it's a complete mix, in my opinion, that Techno Electric can give as a solution.
Techno Electric on Mayuresh's radar. I just want to quickly pull up and see what's happening with the KRBL and LT Foods. All your rice export plays, yes, they are up. So the story on wires last evening, and we're getting more details on it as well. The government has allowed the export of non-basmati rice up to 1,000 metric tons. Remember, they had stopped this in July last year, as well as for basmati rice. Now recent news that stocks are sufficient in our godowns, etc. So this will be some relief maybe to some of these players. A lot more to talk about, but for now I have to thank Mayuresh and Aditya. Thank you so much for joining us this morning. Always great to chat with you guys. Very short break, but on the other side, we're speaking with Tata Tech, the company which has been in news after this big JV that they're going to begin with BMW. What is that entire deal about? All that and more with Warren Harris after this break. right, Tata Tech has been in the news because of a prestige deal, I think I could describe it as they've inked with German luxury car maker BMW. They have announced a JV which will be setting up an automotive software hub in India. We are speaking now with Managing Director and CEO of Tata Tech, Warren Harris, who joins us on the show. Very good morning to you, Mr. Harris, and great to speak with you here on NDTV Profit. Now, we have sketchy details of the deal so far. We know it's a joint venture with BMW. It's a huge project. You're going to be in at least 3 cities, etc. But can you share more details? What we would love to know is there any investment that Tata Tech puts in? What is your share of the deal, etc.?
It's a really big day for the engineering services sector here in India. To have a premium automotive company like BMW make a commitment to India at scale is something that I think is a testament to the growing capabilities that we collectively represent here in this country. You know, today we signed the joint venture. The joint venture is joint venture is subject to regulatory approval in Europe and in China. So I'm not in a position to be able to share too many details, but what I would reinforce is that it's going to be focused upon automotive software and also the development of enterprise IT capabilities that will further enable BMW to optimize the way in which it runs its operations globally. So it's a very exciting day for us, and also an exciting day for the Tata Group. The success that we've celebrated today was enabled by BMW undertaking a search over the last 12 months of candidate Indian engineering services partners. They made a decision on Tata Technologies based upon capability, but also values and culture. And our proposition to BMW was also reinforced by other group companies, and specifically companies like Tata Elxsi. So it's a great day for us, but it's also a great day for the Tata Group.
Agreed. It is a great day, Mr. Harris. And, you know, we saw that in the stock run yesterday. But having said that, is there any sort of detail you can give us on the size of this JV? What is the quantum of investment? What is, for example, the contribution to your top line that is going to come with this deal? In what aspects are you partnering with BMW? Anything that you can share there?
As the name joint venture communicates, this will be a joint venture between both organizations. You know, we will have a material say in how the JV operates. We'll also have a material ownership position in the organization. But at this stage, given the requirement of regulatory approval, we can't disclose too much in the way of detail.
I think one thing that the street would definitely like to know, and this is something that maybe bothers analysts that track your company, is your dependence on your anchor clients. Your top 5 account for about 70% of your revenue. Your top few are for about 45-46% of the revenue. Can you give us a sense if this deal with, or this JV with BMW now reduces that concentration with your anchor clients?
One of the things that's synonymous with Tata Technologies' value proposition is the strategic nature of the relationships we have with our clients. And so although we typically work with a small number of clients, the commitment that we make to those clients and they make to us is material, it's meaningful, and it's long term. You know, we have focused upon the top R&D spenders in the 3 sectors in which we operate: automotive, aerospace, and transport, construction, and heavy machinery. And wins like this certainly improve the customer pyramid. But as we expand our customer base, we want to stay very true to the difference that matters that Tata Technologies represents, which is our ability to be able to undertake the most complex engagements in this sector. You know, the type of work that we undertake is typically synonymous with the type of capabilities that the OEMs have themselves. And so we're very clear about where we sit in the market, and all of the engagements and the customer relationships that we're investing in support our ability or support our ambition to expand that.
That's great, Mr. Harris, but let me reiterate that question, which I haven't quite gotten an answer to. For example, does this bring BMW in your top 5 or top 3 client list?
I think maybe in 12 months' time we should have the same conversation. But at this point in time, I'm not going to speculate.
Okay, I'm going to hold you up to that, and I hope we can have that conversation with more details. But let me come back to the scope of what you will be doing with BMW. For example, is this going to be focused on their ICE, vehicles or their EVs? What will be the range of contributions to BMW? Is this for a new kind of vehicle? Can you give us some sense there?
Well, the scope of the JV is focused upon 2 domains. One, automotive software, as BMW look to inform their future products with more and more connected and digital services. The JV is intended to make a contribution to that, but the focus will also extend into enterprise IT systems. So the type of digital systems that will further enable improved productivity and the optimization of how BMW does business across its entire value chain. So it's in those 2 areas that we'll be predominantly focused.
Anything you can share in terms of the number of jobs this will create, the number of employees across the facilities in India?
All that I will say is that it's material. This represents a very strategic and very meaningful commitment from both Tata Technologies and BMW. And, that's one of the reasons that we are excited. But in terms of specific numbers, again, given the constraints under which we are currently operating, I'm not in a position to be able to share detail with you.
Right. No, I get that. One thing, though, that I wanted your comment on is, JLR is a key client of yours and a rival of BMW in several markets in Europe as well, of course. Does that create a conflict of interest for you? I was just curious to know how you manage this.
Well, we've established a capability to protect the confidentiality and the information that is shared with us by our top clients. We're very proud of the relationship with JLR. The relationship at JLR has allowed us to demonstrate the capabilities that we represent on both the full product side of our value proposition, all the way through embedded electronics, software, and again, enterprise IT. So we've been able to, I think, demonstrate capability at scale with JLR that has really reinforced confidence with other customers like BMW. But we will continue to protect the trust and confidence that is extended with Tata Technologies across our entire customer portfolio. Integrity and trust is the basis on which we've built our customer pyramid, and it's something that we will never compromise upon.
A story that I wanted your take on, Mr. Harris, and this caught my eye yesterday, that Xiaomi has launched its first electric vehicle, and they saw astounding bookings on day 1. And it's interesting that how essentially a mobile phone company is pivoting to producing cars. I wanted your take on this in terms of how OEMs and tech companies will be converging and doing very similar things. How is Tata Tech placed in moving in on that trend?
That's a really great question. And what Xiaomi have done and Huawei are doing in China, it contrasts sharply with the announcement that Apple made in the earlier part of this year, in and around the disbanding of their automotive ambitions. I was in China some 3 weeks ago, and a couple of things surprised me. One is the convergence of tech and product in the Chinese market. The seamless integration of the digital platforms that companies like Tencent, Xiaomi, and Huawei represent is incredibly impressive. The transition from home to vehicle to office is somewhat seamless in China, and I think it represents a benchmark against which most other companies globally will be playing catch up. And so I think the connected services proposition and the integration of connected services with EVs is something that China is currently leading the world on. And I'm excited about the fact that we, Tata Technologies, have a material presence in China and a support in many of the companies that are driving the type of innovation and the type of capability building that is not only disrupting the market there, but is increasingly influencing the trends in Europe and in North America.
And what is the size of your revenues from China, Mr. Harris?
It's not something that we disclose, but I would say that I'm very proud of the nexus that we have in China, not just because of its material contribution to our overall business, but also because, like with other territories, the majority of our employees are Chinese. We do not practice an India out proposition. We have a balanced onshore offshore proposition, and again, we're very proud of our heritage here in India, very proud of our heritage within the Tata Group, but we position ourselves very much as a global company.
Another challenge, a big challenge really, that global players are facing, Mr. Harris, is getting the software right for EVs. We've seen it delay product launches. Perhaps only a Tesla has cracked it. Where is Tata Tech placed here?
Another great insight and great question. Certainly, software now is increasingly on the critical path of vehicle launches. We've recognized that trend some 10 years ago and have been investing over the last decade. And the fact that somebody like BMW has undertaken an exhaustive search of candidate engineering service providers here in India and has selected Tata Technologies as its partner of choice, I think is a testament to the breadth and depth of capabilities that we now represent. You cite Tesla as a great example of where the industry is trending, but to the point that you made previously, I think the Chinese are not only playing catch up, but in some areas, particularly in terms of the seamless integration of different parts of our life, I think they're actually taking a lead. The fact that Tata Technologies not only has capabilities, but also has a presence in these different parts of the market, I think uniquely positions us to capitalize our learnings and ensure that increasingly we're in a position to be able to represent that to the customers that we serve. We're in a very exciting transformation in the automotive and the mobility space. That's providing all sorts of tailwinds for companies like ourselves, and we fully expect and are investing to capitalize on that.
I'm curious to know how all of this translates into what we will see in India and by when. Do you think that this tech that you're talking about, a seamless transition from office to home in your EV, etc., will reach India fairly soon, or are we still at a nascent stage here?
I don't think so. If you look at the progress that the market leader, Tata Motors, has made in electric vehicles, I think the investment that they've made in EV products, in converting internal combustion engine platforms to electric platforms, that's allowed it to take a lead on the competition and has certainly defined its fortunes over the last couple of years. The progressive nature of the product proposition and the capabilities that are informing the Tata Motors portfolio is something that we're excited about in terms of the contribution that we've already made, but also the contribution that we expect to make going forward. And I think one of the things that's really exciting for the industry here is that we're doing that in a very frugal way. And not only do I think that will provide very competitive products for the Indian market, but I think it will also increasingly provide Indian OEMs and their associated supply chains with opportunities in the broader market globally.
As we round up, let me come back to the JV with BMW, which is why we're having this conversation, Mr. Harris. Can you share what are the timelines in mind to actually execute it? I know you're waiting for regulatory approvals, etc., but what has been penciled in?
Yeah, the regulatory approval is likely to take several months. We have been planning on the JV over the last 6-7 months. And we expect to continue that as we are going through regulatory approval. So the formation of the JV is not yet determined, but I would expect it to be in the second half of this year.
All right, so that JV is likely to form in the second half of this year, says Warren Harris. Thank you so much for speaking with us. Pleasure to have you here, and we hope to have you back soon. All right, Warren Harris there, the CEO of Tata Tech. Quick look at what the stock is doing. It was darling of the market yesterday, seeing a bit of pressure today, but nothing massive either way. Markets overall are seeing a spot of weakness. I would say banking stocks more than anything else. The Bank Nifty nearly 0.5% down. Realty is not having a great day as well, led by Macrotech as the biggest weakness in that space. We'll take a very short break, but on the other side, we're talking metals and much more. Is the rally sustainable? Stay tuned.
Welcome back. You're watching India Market Open. It's a morning of consolidation, but no surprises there. We've actually held out quite well over the last couple of days of trade. March ended on a positive note, and April hasn't been too bad either, with a new record high that we saw at the day's high point from what you can see. So the buying's coming in. We're closer to 22,400 from what we can see. Lots of pockets of interest in today's day of trade as well. The broader markets continue their outperformance. So while frontline names in the banking space are weaker, you've got stocks in the insurance bag, capital market players that are looking quite good. Metals continue their upward journey. Auto stocks seeing some profit taking, and you've got stock-specific trade as well that's driving action in today's session. But all in all, it's not a bad day of trade. It's a buy on decline from what we are picking up in terms of activity from traders. In terms of metals, remember stocks like MOIL have seen a massive surge as China's manufacturing has rebounded. Stocks like Hindustan Copper as well are doing quite well. Rakesh Arora, founder of GoIndiaStocks.com, joins in. Rakesh, hi, good morning. Thanks for joining in. Rakesh, strong rebound trade that we're seeing across metal names on back of Chinese PMI data, seeing an uptick. Do you feel like this recovery across China, the US, India is here to stay, and that could mean a sustainable uptick for metal stocks from here on?
So apparently things are, falling in place for commodities. And on one hand, we are expecting interest rate, cut cycle to start in US. And as you mentioned, that PMI data has been surprising positively, not just China, but even Eurozone and even US. So demand should be better than what it was in last year. But having said that, what exactly comes out of China is more important than what goes in. And China has been exporting quite aggressively. So in the first 2 months of this year, Chinese steel export is up 23%. Which already was like a 7-8 year high last year. So China is exporting quite aggressively, and this is not limited to commodities, but even finished product. It is estimated that around 12 to 13% of extra steel production is being exported out of China in form of EVs, renewable solar power panels, etc. So China is aggressively dumping material into global market. So I'm not really sure if this rally has too much of legs. There is support at the bottom, and maybe it will inch up commodity prices. But it's not a full-blown rally that we have seen, say, pre-global financial crisis or even during the COVID period.
Of course, the last time we saw the commodity super cycle was all the way back in the mid-2000s. And now what we are seeing is prices of iron ore, steel, coal, natural gas that are rising quite sharply. But Rakesh, if we had to make an investment call, maybe for the next 1 year, I know stocks like Tata Steel do trade at a record high. Would you buy metal stocks today?
So,
and if yes, which ones would those be?
Unfortunately, Indian market has been on a kind of a strong bull cycle, and all these metal stocks have also benefited out of that. So valuations leave hardly anything on the table for the investors. Most of these stocks are now trading at multi-year high price to book levels, whereas sustainable ROEs haven't really improved as much. So I think risk reward ratio for metal stocks at these levels doesn't look that exciting.
Doesn't look that exciting. And also, what did you make of those numbers that came in from MOIL, Hindustan Zinc and Nalco? I mean, MOIL has had one of its best